All right, folks, today we are going to learn how to complete a worksheet. All right, now on the note, on LMS, I asked you to print out these adjustments as well as the the four worksheets. So there's one, two, three, four. So we're going to be moving around between those worksheets. All right, so let's go back to our first adjustment. All right, so the first adjustment is, let's assume that it's the end, or $400 worth of supplies remain. Keyword is remain on December 31st to 2020, let's say. So what we're going to do is right away from this adjustment, we're dealing with the adjustment for supplies. So we know that the debit's going to be supplies expense and the credit is going to be supplies. Remember, you have to memorize the adjustments. Okay, so supplies expense and supplies. So what we're going to do is we are going to go to the first worksheet that I provided you with. Okay, and you'll notice that we started the fiscal period with $1,000, right? So now they're saying that we have $400 worth of supplies left. So what that means is we used up $600 worth of supplies. So supplies expense debited and supplies credited for $600. Now the second adjustment is 3 years of insurance were prepaid on the first. So let's go to our worksheet. So this represents insurance, or yes, 3 years were prepaid. Now it's December 31st, so one of those years, okay, was used up. So 3 years cost $900. So 1 year must be worth $300. So $300 worth of the prepaid insurance was used up. Now what's debited and credited in a prepaid adjustment? So insurance expense is debited and prepaid insurance is credited. So let's move to our second worksheet. So in our first adjustment, supplies expense is debited for $600. Now, supplies expense is not in our first grouping of accounts, right? So we have to add supplies expense to the bottom of this list. And in the adjustments column, we're going to debit it for $600. Now, supplies expense is debited and supplies is credited for $600. So our first adjustment has been recorded. Our second adjustment is for the adjustment for prepaid insurance. So remember, we used up 1 year's worth of insurance. So 3 years when we bought it cost $900. So 1 year was used up, $300. So the adjustment for prepaid insurance is insurance expense. It's not in our original list. So we're going to have to add it to that column. So insurance expense debited for $300 and prepaid insurance credited for $300. All right, so going back to our next adjustment. So the next adjustment is all of the prepaid rent was used up this year. So if we go back, okay, and check our third worksheet, you'll see that rent expense, which is in our list, so we'll just use it, all of that rent was used up. Or sorry, prepaid rent, all the rent was used up. So rent expense is going to be debited for $5,100, debited, and prepaid rent, which is an asset, it's going to go down, is going to be credited for $5,300 or $5,100. All right, so that adjustment is done. Now, the next one is for depreciation. Now, depreciation, the adjustment is depreciation expense, whatever. In this case, it's equipment. Depreciation expense is going to be debited for what we're going to calculate it in a second. And accumulated depreciation is going to be credited. Now, we need to know what method of depreciation we're using. Now, in this case, we're using the declining balance method. So something should go off in your head that I need book value. So the original cost minus what's in accumulated depreciation. Okay? So if I go to my worksheet, the original cost of the equipment is $12,000. And because I'm using the declining balance method, I'm going to have to subtract what's in accumulated depreciation. That's going to be book value. So 12,000 minus 2,400 is $9,600. Then I'm going to multiply by the depreciation rate. And let me grab a calculator. $9,600 times 20% is 1,920. So if I check my fourth, okay, if I check my fourth worksheet, you'll notice that I'm going to have to add depreciation expense at the bottom for 1,920 and credit accumulated depreciation for the same amount. Okay, so now once we have all these adjustments done, then we're going to total them up. My suggestion to you is extend that top line all the way across your page. Okay? Now, and then just leave it. Now, it's a matter of filling in the adjusted trial balance, the income statement, and the balance sheet. So we'll start with cash. So cash originally had $13,000 in it. We didn't adjust anything, so it's going to be $13,000. Same thing for accounts receivable, but let's look at supplies. Supplies started out at $1,000 debit balance, and then we credited for $600. So there's $400 left. So the adjusted trial balance is $400. Okay, for prepaid insurance, we started with $900, a debit of $900, then we credited for $300, so that leaves us with a debit of $600. All of the rent was used up, nothing. Equipment, we didn't touch it. Okay, so it stays at 12. So every account should have a number in the adjusted trial balance, whether it be 0 or whether it be a number. Okay? Now, the next step, once this whole column is filled in, then we're going to transfer everything from the adjusted trial balance to either the income statement or the balance sheet. And we're just going to do them in order. So cash, it goes on the balance sheet. So we're going to transfer that amount to the balance sheet. Accounts receivable to the balance sheet. Supplies to the balance sheet. Prepaid insurance. Okay. Equipment. Okay. Now, take a look at this one. Okay. Accumulated depreciation. When we started on the trial balance of $2,400, then we credit a credit of $2,400. We credited an additional $1,920. So our total and accumulated depreciation is now $4,320. Now, that is a contra asset, so it goes on the balance sheet. Okay, and then we do accounts payable, we do bank loan and capital, okay, as well as drawing. So all those get transferred to the balance sheet. Next, we have fees earned. Now, this number gets transferred not to the balance sheet, but to the income statement. okay, and we keep going down, all the expenses are going to be transferred to the balance sheet, or sorry, to the income statement. All right, now we finally get to this point, right? And we come up with totals, okay? And you'll notice that these two totals don't balance. Neither do these two, okay? They're not supposed to. And the reason is because we haven't accounted for the difference, which is either the net income or the net loss. Now, the general rule is to add the difference to the smaller amount. So if you notice in this case, okay, our revenues were $144,000. Our expenses were $114,000, or $114,720. So our revenue is greater than our expenses. So that means we had a net income. So notice over here it says net income on that line. And we add the difference to the smaller amount. So in this case, 29,280. Okay? Now we do the same thing for the balance sheet. You'll notice that 48,000 on the debit side, 18,720 on the credit side. They're not balancing. They're not supposed to. Okay? So when we add the difference between these two numbers, it should be the same as this difference. So we're going to add it to the smaller amount, and then all of a sudden our last line we now balance again. And folks, that is how we complete a balance sheet, or sorry, a worksheet.